All right, we are looking at the euro dollar, and today I'm going to talk a little bit about knowing when to cut your trades and save the stop loss, and some of the rules that I use to go along with that idea and protocol. And you can see that we did trade up very closely to that 118.50, 152 level. I wanted to see it sweep that. As I was mentioning yesterday, I said it could probably do that overnight, and didn't get through it. Just fell short of it, but then it did sell off. So this is what I was referring to and have been talking about at extremes of what summer trading is like. It's very frustrating because price can be very fickle, and it's not as clean and delivered as nice as we would like to see. So I'm going to do it long in here on this fair value gap here, and I do have a best case scenario exit. Okay, so I don't really believe it's going to go up that high, but in the event that I'm wrong, I always like to have something in there that would be an overzealous target. So I'm in here, I'm long, and you can see the 15-minute time frame on the left and then the 5-minute chart on the right. And as I'm watching price, I want to see how it trades as it gets closer to that old breaker low. You can clearly see on the 15-minute time frame. So I'm just showing you the entry candle. Okay, so price is coming back down inside of that short-term buy-side imbalance, sell-side inefficiency. Now I want to see it expand on the upside, and there's a small little fair value gap around 118.25 level. I'd like to see it trade up there and allow me an opportunity to take a partial off there. Not interested in really moving the stop until I get a first partial. So far, it looks like it wants to reach up into that fair value gap. Now, at this moment, I really want to start seeing price expand on the upside. But it's not really trying to show a lot of energy yet, and that to me is concerning. Now, I could have taken a partial here, around 10 pips or so, but I was looking to take first partial at that fair value gap. And that to me is concerning because I don't want to see it come back very deep without going into that fair value gap. So that to me it warns me that I'm probably offside, and I probably will be better closing this trade because I'm probably going to get stopped out. I would have rather seen it really trade aggressively on some large candles on that 5-minute chart up into the fair value gap around that 118.25 level. So I'm giving it a chance to do it here. And again, I don't like it stalling here. Now, I wanted to get it a little bit deeper into that fair value gap, but I technically missed my opportunity right there. Now at this point, I realize I probably have not done well by exiting with a partial, because I'd be in a better position right now to weather the storm and maybe even roll a stop to just underneath my entry. But it hasn't given me the delivery of price I was looking for. Even though it traded technically just inside of the fair value gap, I wanted to see it go more or less consequent encroachment or towards the end of the upper range of it or premium high, and it didn't do that. So I'm watching it here, giving it a last minute chance. This candle here needs to really surge and run right up in and completely close in the fair value gap. If it doesn't do that, I'm definitely offside, and I'm going to want to close the trade. See how much time it's spending? And look at that 15-minute time frame on the left-hand side. Really muddy. So we bumped up against the breaker on the 15-minute time frame, all indicative of I'm offside and I'm going to want to take the position off and save the stop loss. Now, when you're in trades and you're in temporary paper profit, and I'm referring to trades when you're in live account trading, you're going to feel like you don't want to close the trade. You feel like you want to stay with it, and it's going to work because you took on initial risk, so you got to get paid. This is what you do, okay? You bail. If it doesn't pan out for you, it doesn't deliver like you want, it's the same account you can see here, it's not worth spending mental capital. It's not worth worrying about, arm wrestling with it, trying to figure out what it wants to do, and just move to the sidelines and then reevaluate whether or not there is a trade on the opposite side. Sometimes there is, sometimes there isn't. But to kind of like illustrate more, I'm going to try to trade again, but I'm going to reverse now. So I don't see it wanting to go higher, at least from here. So I'm going to mark out a bearish order block, and I'll wait for it to trade back up into the bearish order block after conferring with the dollar index. And you can see here. So we're trading off a bullish order block, and on the hourly chart, I'm thinking it might want to roll up into that buy side liquidity, and we're inside of a breaker, or just recently traded into a breaker. So after taking sell side liquidity right below that short-term low, we had a nice run up, trade back into a bullish breaker. To me, short-term, intraday, dollar bullish, that should be another selling opportunity for euro dollar. So I'm going to mark up my bearish order block right here, and I'll wait for that to set up an opportunity to go short. So this trade will open up with a 12 pip stop loss. Okay, sold short as it traded up into the bearish order block. And I have, again, a very overzealous target that would take us back down below that 1780 level again. Now, you might see that fair value gap at the 118.25 level and thinking, okay, it might fill it in now. I don't see that because we've already tried to get up there, we broke down, and we had a short-term market structure shift on that 5-minute chart on the euro, left-hand side. So now we've traded back down below the bearish order block, and I want to start seeing sell side attacked. Dollar is looking like it wants to rally. And notice I'm having the hourly chart on dollar because I'm not trying to watch and compare and contrast every small little 5-minute fluctuation between the euro dollar and the dollar index. Okay, so we're starting to see some advancement on the dollar on the upside, and then euro dollar taking out that short-term low. That's all a positive thing. Now, again, I missed my opportunity to take partials here. I should have took a partial here. I didn't, which is going to be one of the reasons why you'll see how I manage this trade later on. Dollar index still reaching higher, and we want to see the fair value gap on euro offer resistance. Now it can trade back up into the fair value gap again and bump the premium high. That's fine. But notice it has a small little sell side imbalance, buy side inefficiency just above the premium high. And I just lowered the stop because we've moved essentially about 25% of what I wanted to see in terms of pips. But I was saying that we could see it trade back up into the premium high of the fair value gap on the euro dollar. And that would be reasonable. But it might just sweep above the fair value gap premium high because of the sell side imbalance, buy side inefficiency that's shown on that 5-minute chart. And again, I missed an opportunity there. So I'm not watching the chart both these times here. So I missed both instances. Now, this is what's going to happen in real world. Okay, it's going to happen with you. This is normal. It could trade back to that, but I want to see it trade lower than that. It needs to now aggressively move lower. But I missed 2 opportunities to go and take a partial. This is critical. This is crucial intel, because this is one of the reasons why I will always elect to bail on a trade. If it starts coming back against me and I haven't taken at least one partial, and I had 2 opportunities here and I did not do it. So as the market starts to meander around and trade inside that fair value gap for much more time that I'm comfortable with, it should have already left that fair value gap and started moving lower to like the 1790 level. That would have been reasonable to see it start doing that by now. Notice it's not doing it. That's concerning for me. So I want to see it trade aggressively here after it's moved sideways and starts making smaller ranges. I want large ranges, but on the downside. I want euro dollar to start reaching aggressively lower, and it's not doing it here. So this is, to me, problematic for the trade. So I have a decision to make. Either I let the stop stay where it's at and take some of the trade off where it's at right now, or watch and see how it trades inside of that fair value gap with the bearish order block on the 5-minute on the left-hand side. Now again, we're really spending too much time in here, and I already have it in my mind that I'm going to bail on this trade because it's already spent too much time bumping up into that fair value gap, and it's spending too much time going sideways. So now I move my stop down to a point where if it does run up and stop me out, at least it's not a loss, because I want to see if it hits this level here and trades off aggressively. And the level I'm referring to is that bearish order block I just drew on the euro dollar. Now it should sell off aggressively hard right here, and it doesn't happen. It's just sitting there. So the time of day, way late in the afternoon in New York time, and the dollar index is just not showing any more near-term strength. So as I'm looking at this, I'm thinking I really messed up. I messed up on 2 instances, both in the previous trade and on this one as well. So I have to cut bait. I have to acknowledge that I made an error, but notice I'm not beating myself up. I'm not saying, oh, you're so stupid, ICT. Oh, you know better than that, ICT. It's just I wasn't literally in front of the charts at the moment when it traded down there. So that's going to happen in your trading. So what do you do when it happens? Well, this is what I do. I look and see how it trades, and if it starts coming back against me at levels where, had I not taken partials, I'm going to feel the pinch. Whereas if I do take partials, I usually don't feel the pinch, and I'll let it take the stop. So I'm balancing fear and greed. In this instance, on both trades, because no partials were taken, I'm forced to do what? Follow a protocol that I've adopted for myself, where if it starts to squeeze on me, it's better for me to just completely get out of the trade. Even if this thing does start to cascade lower and trade all the way down to where I thought it was going to go after I get out, I don't care, because it's not worth my time worrying about whether or not it's going to pan out, because it's already shown here enough that it's probably not going to. So the previous trade, obviously, I did the right thing by getting out because it went down. It was stopped me out for a loss. And here, I have a small little piece of a profit, and I have the opportunity to say, okay, I made a mistake. I did not take partials in 2 instances. 2 times I did not take partials below that fair value gap premium. Below that fair value gap discount low. So I closed the trade, and protected my stop. And again, same account. So over 2% with making mistakes. Wrong but profitable. Not right, but acknowledging the errors. And this is one of the things I do when I'm doing my positions and trades. I manage fear and greed with these ideas and protocols. Hopefully you found this insightful. Until tomorrow, be safe.